What is going on YouTube? It's Brendan from Market Makers. Huge video for you today, the collapse of our lifetime. We have a lot to cover. Powell's testimony, the Q&A session afterwards, the equity space, the crypto space, the Dixie, the VIX. We're going to get into it all in this video. Guys, if you care about any of your friends or family that are active in these markets, please do like and subscribe and share this video to help support this work. Let's jump into this. All right, guys. So Powell talked before the Senate yesterday. The reason that this is the collapse of our lifetime, you're going to understand that thumbnail title after you watch this video. So let me set this up for you. Senator Warren. She was referencing Powell's own paper, the Fed's paper, saying they have a target to increase unemployment by 1%. Unemployment's at a 54-year low right now at 3.4%. They want to increase unemployment by 1% to help bring down inflation because they have to slow the economy to bring down inflation. So Senator Warren brought to light the Fed has done this 12 times since World War II, where you increase unemployment by 1%. Do you know how many out of those 12 times we avoided a recession? The answer is 0. 100% track rate for entering a recession. Why is that important? Because the S&P, based on historical market norms, has an average of where it trades. 31.41 minus 33 to 35% from the all-time high in that time frame. Guys, you have to understand this target. I gave you this target last fall. Last video I showed you Eric Johnson, the human head of hair from Cantor Fitzgerald. Equity risk premium on a 20-year average should have the S&P, guess where? 3,100. And look what the largest investment bank in the world just published today. Their new target for the S&P, 3,200. Guys, this is the only channel you're going to understand the macro market cycles that allow you to be predictive while the rest of the marketplace is being reactive. JP Morgan says this is because of Powell's speech, but if you understood the cycle you're in, then you would understand where price is going. We need to look at the key support levels and everything else here in the market. Guys, this market's going to provide so many trades for people. This is an opportunity. I speak from firsthand experience to make life-changing money. If you're worried about missing trades, if you're inexperienced, if you want to be in a community of supportive people and professional traders, check out our Discord. The link is in the video description and you can join for free. Check out one of our two sponsors. Download the app, SimpleFX. Our link is pinned in the YouTube comments and in the video description, or BingX. On both of those platforms, you can trade all of the various assets. SimpleFX is an FX exchange. It's decentralized. You can trade everything in USDC with a VPN. All that information in the video description. And BingX is a traditional crypto exchange where you do not need a VPN. And with our link, 0 spot fees on BingX. Special bonuses on both of our links, guys. Pick one. Message Lee in the Telegram and get into our room for free to make sure you don't miss out on this marketplace. All right. Let's go ahead and talk about what I'm about to show you. Senator Kennedy, he set up a question for Powell. I'm gonna play this, guys. It's a little bit long. It's about 2 minutes. This clip. Listen to this clip. Okay, we're gonna talk about it on the other side. I want you to listen to this clip. This is very, very important to understand. This is providing you what's going to happen in this marketplace based on Powell's own answer to this question. All right, Lee, play the clip.
The economists did a wonderful study. They looked at 10 disinflationary periods in America going all the way back to the 1950s. Disinflation is what you're trying to do. It's a slowing in the rate of inflation. Am I right?
Yes.
In other words, prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay. Based on history, in the 10 times that we got inflation down, disinflation, since the 1950s. In order to reduce inflation by 2%, unemployment had to go up 3.6%. Now, that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there have been recessions and downturns when the Fed has tried to reduce inflation.
Now, right now, the current inflation rate is 6.4%, and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again, blame anybody, but if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay. And to get inflation down to 2.2% based on history, an immutable fact, unemployment would have to go to 10.6%. Would it not?
No, I wouldn't.
That's what the record shows. That's what the history shows.
Yeah, I don't think that kind of a number is at all in play here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable. It's undeniable that the only way we're going to get this sticky inflation down is to attack it on the monetary side, which you're doing, and on the fiscal side, which means Congress has got to reduce the rate of growth of spending and reduce the rate of growth of debt accumulation.
Yes, so if you listen to that clip, guys, you know I'm big on market history, right? So you listen to that clip based on market history, the history of the Fed raising interest rates, of unemployment going up, some staggering figures come out of that. To fight inflation, to get inflation down, historically, from 6.4 to 4.4 would require the unemployment rate to double. Roughly every 1% of unemployment that increases is about 2 million jobs. Okay. So you're talking at that point about unemployment going up 6 to 7 million jobs 7 million people being laid off or fired, essentially. And to get inflation from 4.4 to 2.2 would require an unemployment rate north of 10%. Understand that is 20 to 25 million people being let go from work, no income coming in. Okay. Now you can see how Powell kind of fuddled that. He was really, he doesn't want to say, he doesn't want to commit. Oh, well, we don't project that. Well, of course not. Of course they don't project that. Let me give you a history here of some of the Fed's projections. 1972, the term soft landing was invented by the Fed back then. We foresee a soft landing in the marketplace with inflation coming down and the economy quickly recovering. Soft landing. What happened in the 1970s? The S&P dropped 57%. You didn't make a new all-time high the rest of the decade, and you had inflation rearing its ugly head over and over again in the 1970s. You had stagflation. You lost the whole decade. 2007, Ben Bernanke does a speech and says he foresees a soft landing for the economy. Ben Bernanke, 2007. Anybody know what happened? Go watch the movie The Big Short. Global collapse of the financial system. No soft landing. You did not make a new all-time high once again until 7, 8 years later. So guys, you have to understand what's happening. In fact, go backwards to 2021 or 2022, whenever Fed Chair Powell started talking about the soft landing narrative and mainstream media picked up on this. Third time's the charm, right? Last two soft landings didn't work out, were epic disasters. But once again, soft landing is on the radar. Guys, if the market moves with historical norms of what has to happen in unemployment, understand how catastrophic that is to have unemployment double or more than triple in this marketplace. So if you think the S&P is going to hold 4,000, right, or 3,500, if you double or triple unemployment, I'm telling you where you are going in this marketplace. If you think Bitcoin's going to hold 20K because the bottom is in the 4-year cycle, all these different things, if you think Bitcoin's going to hold 20K when you double or triple unemployment, guys, you're in for a rude awakening. This is the difference of being stuck for decades, stuck for years, or profiting in this marketplace. And if we go ahead and look at this, guys, once again, where are we going? I am 100% certain the S&P is going to come down to 3,100 to 3,400. When is that going to happen, guys? We have the .com pattern that we've been showing you. On the left, .com comes back and back tests its trend line from the all-time high, bounces up for the spring equinox, makes a local high, and then craters, sells off. Where are we right now? The exact same rally candlestick pattern. Back testing our trend line from the all-time high. Spring equinox is March 20th. The CPI comes out the 14th. The CPI, according to the Fed, right? So give it whatever weight you want to, it's supposed to come in lower. If it comes in lower, I anticipate a rally. We're going to look at the upside targets, and then we're talking about a massive drop, guys. Just understand this drop. Let's just assume we come up to a co-equal high here on the S&P, a co-equal high, just like we did in .com, dropping down to that target that now JP Morgan agrees with. We're going to Mike Wilson from Morgan Stanley, 3,000, JP Morgan, 3,200, Eric Johnson, Cantor Fitzgerald, 3,100, my target, 3,141. Guys, that's a 25% drop. Understand, that's almost 1,100 handles on the S&P. Massive, massive opportunity for life-changing money, and then you can trade the bounce. And how will this affect crypto? Crypto moves typically at a 2 to 2.5 beta, talking about Bitcoin to the overall marketplace. So you're talking about a 50+% drop in Bitcoin. Massive, massive life-changing money. And all you have to do is understand the cycle to understand what's going to happen. And as you guys know, what will happen down here? This is the bottom. JP Morgan will tell you to buy. Morgan Stanley will tell you to buy. Retail, mainstream media, they will be buying because this is the historical norm, minus 35% in a recession. We're going to trade this rally, guys. This is going to be a 20-25% rally. And I personally believe this rally will fail as the economy gets worse and worse, as unemployment continues to go up. This rally will fail, and you will come down to your historical bubble target of minus 50% that you have hit in every single bubble going back to 1929. And again, I personally feel you're going to exceed that target. But for now, let's focus on this. This is 2409 on the S&P. And once again, you will have yet another rally of some sort. That target I have late September, early October. Fall equinox, guys, and you really do run the risk of going sub 2K there on the S&P. But for now, we have these key dates up and coming. So let's go ahead and look at this on the daily time frame. This white line is your 45 angle on the S&P, guys. Be very well aware of this because this is typically how you establish a bullish trend. Gann taught this to Wyckoff. Wyckoff used it in his trading, and you can see, look how accurate this is. 45 angle. What I did was I converted this to a line chart and laid it out. I have a Gann fan video out there on YouTube. It is free. You can watch it. So check that out and you'll see how to do this. And you can see, found it for support. Look at that. Literally without a fib or anything, just bounced, touched the 45. It's trying to hold that. Powell's talking to Congress today, but he's reading the exact same speech. The Q&A could provide some volatility. But guys, the market wants to rally. Remember, there is no smart money in this space. There's dumb money and there's retail. And 80% of retail loses money, and dumb money can move the markets. That's the big banks, the hedge funds, everybody else. Okay, they want this to rally. You do not want to lose 39.40. That is your 200. If something bad happens, look for a back test of that and see if you can hold it, okay? But this is where we're at. And if you look at this from fib perspectives here, let's just pull a simple fib retracement from that low to the high, and you're bounced off the 618. So your key support level here is 39.78, which you bounced right off of. Underneath that, 39.51. And then if you lose the 200, you got to look at the 1-fib 39.18. Okay. And then we're going to be looking for back tests if this did just fall apart, but I don't think it will. I don't. You guys know I'm macro bearish. I think they want to push this thing up. And with the CPI coming in as a catalyst, if it is indeed lower, look for them to push this up. And I would not be surprised, based on how market cycles work, to have the exact same pattern break us down, just like in .com, which was a double top. Okay. So I'm looking for this to potentially come back up. Now we have jobs report coming out this Friday. If that comes in super hot, that could send you down. But if it just comes in close to as expected, again, the market doesn't need a lot of excuses to rally. Permabulls on mainstream media. Go look at the crypto YouTube space. Most of them think they're being savvy or intelligent by saying, "Well, I like to do the opposite. I like to do the opposite of what everybody expects, and everybody expects a bearish market." They don't understand the market cycle. Markets will rally. Overall, this thing is going to crater, guys. Look at the volume. The volume is all below average on a 21-day trend. What does this tell you? This tells you that you can have a parabolic move with any type of large breakout. That can be to the upside or to the downside because you have low volume, fewer participants, in this case, buying the asset to move the asset up. Okay. So this is susceptible to a large volume candle breakout to the upside or the downside. So you have to watch this area. It's very, very important. And if we go ahead and just pull this down and do our simple fib projection, trend-based fib, guys, we'll use the absolute wick here, go up to the absolute wick here in the mid-range, and then come down to the low. 4166, 4080. Remember that target that I told you to pay attention to last video, 4080? You got the 4075 or 4077. So if any of you were able to short that, congratulations to you. And then price fell back down, okay? So these are your same resistance levels looking at this, but I went ahead and want to show you something to the upside. Where could this rally to? Using a tighter trend projection here from this backup, I wanted you guys to see this. So if we do get that lower CPI, if the jobs report doesn't scare the market, if the market can survive today with Powell's Q&A session, look to come up towards that March 20th. Here's the green line, March 20th, spring equinox. Look to come up here, and this is 4230 on the S&P, the reciprocal move, 886 and 113. Okay, one spot, 128. 4230 on the S&P. If we continue to hold this bullish trend, that's my immediate target. Could it come lower? 4163? Absolutely, guys. You have to watch the channel, have to watch the markets. Again, lots of catalysts in the marketplace. I wanted to show you one more thing with Wyckoff as well. Let's go ahead and get rid of this fib. Lots of people ask me for examples of Wyckoff playing out, and here's a great example of accumulation here on the daily time frame. Okay, you guys know I preach mini Wyckoff structures, macro Wyckoff structures. You can find both, and here you have your selling candle down here, made a low. And then you can see you came up for your reaction, major high. And I want you guys to see this. So here's your accumulation. Look at this, bouncing right off the 45. Exit the trading range. I'll expand this a little bit. Exit the trading range. Here's your Livermore pivot, right? You pull back test the top of Wyckoff at 38.93. And then there's your pivot to the upside. You can have Wyckoff mini structures, Wyckoff macro structures. Just wanted to take a moment and give you a teachable moment here on Wyckoff because I saw that and I was like, oh, that's a great example for you guys. So that's what I'm looking at, guys. 4230. If this continues to move up, we could fail at any of these levels. Obviously, you need to pay close attention to that 4163 because that would be your co-equal high. And of course, the levels underneath it, 46 key level at 4070 or 4080, as well as a 618 at basically 4100. Watch those levels in coordination with what's happening with the macro space. Very key. Let's look at our money flow. You are still bearish on the MFI. Our market makers volume ratio coming up to the median line, still bearish on volume. Guys, a lot of people are asking in the comments if they can purchase one or all of these indicators. These are all free. when you join our Discord, which you can join that for free by trying out one of our sponsors. Okay. Again, Messagely in the Telegram. You get, I think it's a half dozen indicators, custom program, and you get to keep them for life, whether you stay for a day or a year. And market makers, they're gifts to you guys. I think you will love them. So definitely take advantage of that. All right. So let's go ahead. S&P on the line chart. And yes, we have other stuff to go over, but this is the big market, okay? 35 trillion market cap. I want to show you the pivots here on the line chart. It's easier to see. The 43-day pivots we've had since we've been in Wyckoff accumulation. Again, look at this. Provide your high, bank, comes down, provides your low, and you pivot out to the upside, local high, pivot back down, local high, pivot back down. And we have the spring equinox coming up and the Fed 2 days later announcing the rate hike. And of course, the next pivot would be April 14th. And again, this can be a catalyst for more downside. It could be the bottom if we have a hardcore, fast dropping sell off, or you could just be ranging, hit this pivot and sell off. Lots of different options. Again, we have to see the candles. We have to see what happens with inflation. Does it come down? Does it go up? As you guys know, as I've already said, if inflation's hot, it's just going to dump because they know that Powell's going to be aggressive at that next meeting. Okay, so that's my prediction for that. But I have no idea what the inflation number is going to be. So let's go ahead and look at this on the Dixie. Dollar is rising up. Went ahead, did fib retracement to the downside here. You can see we hit the 1 fib, came back up, and where are we now? Let's get rid of this downside projection. Upside projection, we're at the 105. We just flipped it, and you can see price is trying to hold this and move up. Again, you know, if the market anticipates a hawkish Powell, if the market, which is now pricing in the potential, not the certainty, but the potential for a 50 basis point hike, that's why you're seeing the dollar rising. You flip 105, you're going to 106. If you flip 106, you got to watch 108. Okay. The dollar doesn't have to get parabolic here for the markets to sell off hardcore. They can happen in confluence with each other because when people cash out of the marketplace, they literally cash out. When you see a rush to go buy treasuries for protection, if central banks around the world, governments, large fund players want to get into bonds because of the yields, they will literally have to convert to dollars. Okay. So you see the dollar rise up. Remember, the Dixie is the US dollar measured against a basket of currencies. So watching this, but I'm paying much closer attention to the VIX because this moves inversely to the S&P and the VIX is still very low. It's below the 50-day. It is at 19.55. Guys, our market makers Caterpillar triple layered Bollinger Bands. This is so close to bear market tops, which have been happening all along here. Okay. As this channel compresses, you will see an explosion when the volatility kicks up. And because it's so compressed, again, my prediction during this sell-off to this next phase down to the FOMO phase, you will see the VIX spike above 40, spike above 50. It will be a massive sell-off. I don't think it will be as orderly as it was last year. Looking at the Russell trying to hold key support on the 3-day chart, 1884, and it's at 1883. You can see on the 3-day chart, it's printed a little baby double top here. But again, if the S&P moves up, I anticipate the Russell moving up too. You have to get through this week. The jobs report will be a big driver on Friday. As long as Powell doesn't say anything crazy, I think he's basically going to repeat the same thing he did yesterday, today to the Congress. So 1930 gave us a nice trade in the room here at the 786, and we fell down to roughly 1880. So let's go ahead and look at the Russell on the daily. The way you got to look at the Russell, remember, if you're talking about co-equal highs and resistances you failed from are very important to track because you can fail from the exact same resistance again. And if you look at this, where is my brush? There. So the 1988, guys, off our trend-based fib is where we got to before based on our market pattern that I was sharing with you guys. And you can see the trend-based fib here gave us this beautiful pattern. And I can go ahead and draw this out for you really quickly as well. This was a nice trade on the Russell, like 140, 150 handles now at this point. Go ahead and draw this. and this is my chameleon pattern. And you can see we got right up to here, nice descent, and you're trying to base, here's your 45, the white line, need to hold your 45, here's your 200 beneath you. Want to see if the Russell comes back up and gives us a nice macro double top. And if we want to look at more upside on the Russell, guys, looking at the same fib layout, of course, you would have higher upside if the S&P did get to that number of 4230. I'd be watching 2062. There's another fib we could throw in the middle here, and some golden target, which would be 2156, which, I don't rule it out because it is Fibonacci. But the key levels I want to watch here, obviously, are 1930, 1988. Again, that co-equal high concept. And we'll see what happens when we get there. Again, not knowing what that CPI will be. If it comes in super low, you're going to have a massive rally. Comes in the same, I don't know, maybe some volatility, maybe some run up to a co-equal high or just below it and then fall apart. So we'll have to see how that plays out. Let's go ahead and look at the NASDAQ. NASDAQ bounced beautifully off the 200, came back up. And again, you're trying to hold this higher low structure as well. 46 at 12,259, 618 at 12,384, your next key levels of resistance to watch for. And if this does run up, once again, watch your co-equal high up around 12,600 to 12,750. Okay, that's where you want to be watching to see if the NASDAQ comes back up there. Here's your 45 angle and, of course, your 200. So let's check out Bitcoin. All right, guys, Bitcoin. So we're going to talk about some Bitcoin price targets as well. As you know, moving so parabolically, you're going to see Bitcoin really move at a higher beta. Again, 2 to 2.5 beta to the S&P. And so when you're looking at Bitcoin, it is currently at 22,126. Here on the weekly time frame, it is printing a disjointed double top as well. But I anticipate Bitcoin will run up some if that inflation comes down low. Okay, if the inflation report is bullish for the market, you're going to see Bitcoin at least try to come up to a co-equal high, but we'll get into those narrow targets. But guys, once again, that phase 3 discussed, remember, you're a level ahead on crypto. So we're looking for the S&P to come down to this FOMO level. Bitcoin's looking to move potentially down somewhere in between phase 3 and phase 2. I personally think when you look at this, I think Bitcoin's going to get to this level again later this year, perhaps before the equities markets. But if we're just going to throw it out there on a thumb, I would say September, October. Okay. But it could happen in August. It could happen before because clearly it's moving faster than the equities markets. But we'll be tracking it closely. But that's 46.27. That's FI. That's my target. When I had Crypto Savvy on here, Craig, you guys heard me say, my personal target is basically 4K to 8K Bitcoin. That's what I'm targeting. But let's look at this here on the 3-day chart. If Bitcoin does not come up and defeat 25,180, this is on a shorter term trend here, even though this is a long trend. This is going back to August of 22, but a trend-based fib projection from A to B to C point, guys. Looking at that reciprocal move would be 15.5. You're not going to 15.5. If the S&P drops 1,000 handles, drops 20 to 25%, Bitcoin, again, 2 beta, guys, would be 50%. Okay, I have it here at 12,888, which is not 50%. You could easily come down to this 1618 target at 9,517, which would be your sub 10K Bitcoin. Okay, that's possible if the S&P drops to our target. I do believe with 100% certainty you will see the S&P come down to 3,100, that 3,150 level to that 3,400 level. Okay, that $250 range. So you can see Bitcoin come anywhere between 9,500 and at 12,888 on the upside range. And again, we got to watch for the triggers for the sell-off. Looking at Bitcoin here on the daily, I threw across a 45, which is where you're hitting your head as well right now. Okay, so if Bitcoin does come back up, the 2 key levels I want to watch, if the S&P wants to continue that bullish trend, you need to watch 23,103 and you have to watch 25,180, which is where you got to before you fell apart. And remember, this is an area that I gave you the short, gave you 2 back-to-back shorts here for a 13.5% drop. And this trade itself Where is the tool? There it is. This trade itself here, if you kept this trade, which I saw a couple of you in the comments did, and congratulations to you, another 13.71% drop on Bitcoin, okay? So those are the two key levels you really want to watch, 23,103 and 25,180. And again, this is in correlation with what the equity markets are doing. Let's look at some of the indicators here. MFI are still bearish. Volume is still bearish, guys. It's still, again, this is just, I mean, look how weak the candles are. When you zoom in to an 8-hour chart, you're just stacking candles. MFI on the 8-hour chart still bearish as well. I don't see any particular type of trade setup or anything here that I like, and you're not going to with the equities trying to hold support right now. If you threw this in Wyckoff, it would look something like this, getting some down thrust, bouncing back up. You're in mid-range, right? You're in mid-range, and you want to see this move back to the upside. You want to see your MFI cross into bullish territory as well. Let's go ahead and jump over to silver. Now, I know Patrick and a couple of you other guys that were trading gold and silver, these signals, awesome trades, right? These are awesome trades. Again, silver from that 24.41 entry that I gave you, guys, if it comes down to the 1 fib, which I know some people may think is crazy at $16.46, when the markets sell off, go look at the Great Financial Crisis, made a video on it. It's in my playlist, guys. When the markets do sell off. Remember, silver went down 61% in the GFC. Banks liquidate this asset. This is only a 33% decline from here. So silver went down 61%, gold went down 34%, both basically Fibonacci numbers. And if we just get to this decline here, this trade that I gave you, which we're close to, this is a almost 21% move if we get to 19.55, guys. And trust me, when the S&P sells off, if the S&P pulls back and starts rallying, you could see silver try to base here, maybe come up, maybe give you another opportunity here of another lower high. Okay, so we'll be tracking this for you guys. So if we find any re-entry positions, but you're definitely going to be coming down to that 618 for that 20% move. And I think you will be hitting that 16.46, if not deeper. Okay, because silver is more parabolic than gold. If not deeper, you will be hitting that target when the equities do roll over, which is all going to happen very, very soon for you guys that watch my TA. Again, looking at gold, guys, gold gave us a nice move down as well. And let's go ahead and do this, get this move for you. And this was a almost 8% move. Let's see where this is coming from. So, again, Wyckoff concept, right? Where you pulled back from your pivot here. I wanted you guys to see this as well. This is another one. You can see it right here. Hold on, let me show you this. So Wyckoff, you have your selling climax, and then this would be a mini cough structure, right? You have your reaction candle, okay, giving you the local high. Let me get rid of these other lines so they don't confuse you. And this is the method of Wyckoff. Wyckoff's whole system was designed to show you how big money moves the price, okay? And this is what his method is. So you have the climax candle, the reaction candle, retesting the base, your spring to the upside, and look at this, your Livermore pivot, back testing the trend line before you accelerate up, okay? And you do this on the upside and the downside. I mean, look how this is without fibs. Hit 1729 on your retest, the Livermore pivot, the first billionaire trader, Wyckoff's friend. Favorite place to trade was on top of Wyckoff. Boom, shot up to the upside. So, at any rate, let's go back to the fibs. So, looking at the fibs, guys, if this does want to pull back up for a local double top, if it decides to rally with the marketplace, watch gold here. If it does come back up, watch gold at 1880 and 1900 are your first two key levels. And if it came back up to 1926 and the markets are getting near our pivot point dates to roll over, these are all opportunities to reshort this asset, which would then be making yet another double top and falling back down further. All right, guys, hope you enjoyed this video, and next video will be Friday. So everybody, take care. Have fun trading these markets. Check out our sponsors. Answer all your comments as always in YouTube. Talk to you guys soon.